Good morning, retail traders. I'm Washboard Jim here on Thanksgiving Day. Going to try to make you a better trader. I talk about chart patterns, moving averages, and being in the now. I just want to give help to the traders that aren't really getting it yet and need help. This is a beginner's course of what I do, I've done for the last 20 years. And people are really coming up to me here lately and asking me, that I'm a novice goat trader and they want to learn how I trade. And I'm live on YouTube every day, so you can watch me do it there also. And this is the Sneaky Snake. Happy Thanksgiving to everybody. I wish you a blessing. Happy Thanksgiving. First, there'll be in the content will be the links to my X account, and also have a link to my Stockstwits account. So basically there's 5 steps that I take when I'm looking to take a trade. And first thing I want to do is have a strategy. So I built a strategy with chart patterns, moving averages, and being in the now. Chart patterns of reversal patterns that I can see that are going to go to in reversals. And I'm looking for these patterns on a daily basis, trying to look for a squeeze. A squeeze happens when the highs and the lows meet and create a flag of some kind of pattern. And here I have indicators that can show you different kind of patterns that are good to trade with. These are chart reversal patterns. They have continuation, like if you're coming down and you have a descending triangle, or you have a bearish flag on a downtrend, or you have a rising wedge, or even a symmetrical flag. They're all coming in a downtrend. Many times, you could see a reversal on a symmetrical flag on a knife. A knife is a sharp sell-off that happens within 3, 5, 6 minutes. And they can drop pretty good. And they're called crows when they sell. The candlestick is called a crow, and they're lines up and you got 3 of them. Maybe that's a indicator to take a trade. But I'm studying chart patterns. If you can memorize these 16 patterns, I guarantee it'll improve your accuracy by at least 50%. We have continuation patterns, like you're coming down from a snake, all of a sudden you get an ascending triangle. You're coming down from a knife and it breaks out of the knife and you get what you call a bull flag or a symmetrical flag, a bullish wedge, and then your symmetrical flag. Then you have your reversal candles that can tell you maybe you're getting ready for a sell-off and you want to get out of the trade. For example, head and shoulders. We have a rising wedge. It could be a good indicator to get out of the trade once it squeezes. We have a double top. We have a triple top. And then you have the reversals to the upside. You have an inverse head and shoulders. You have a falling wedge. You have a double bottom. You have a triple bottom. Just the opposite of what you see on an uptick. You would see on a downtick for a reversal to either way. So I'm studying chart patterns. And every time I'm looking at a chart, I'm looking for a pattern. Where is this thing going to reverse? And I use different time frames. This is my chart that I use right here. So this is my setup. Like I said earlier, I had the watch list, my message center that gives me my alerts, and then I have the TV on down here of Schwab or maybe CNBC. And all these are linked to my chart. This is my watch list, my top watch list that I like to look at. Like I'll go in here and I'll look at volume highs right in the morning. Like Nvidia is taking a beating. It's got a double bottom here. I called out yesterday on Nvidia. If you took that trade, congratulations. But that's a double bottom. It goes back to that chart pattern. Double bottom reversal pattern to the upside. Triple bottom, double bottom, falling wedge, and then inverse head and shoulders are my 4 favorite patterns to trade. But I'm memorizing them patterns. And this was a double bottom on the 1 hour time frame, which I called out in the room. So on this here, I have my moving averages. You can jot these down or copy and paste it. These are all my moving averages that I'm using right now. And they're pretty good. They are very good. They're very good. I have the EMAs and I have the SMAs on the same chart. I have the EMA of the 9, the 21, the 63, and the 200. And on the SMAs, I have the 50 and the 200. Then I have the regular RSI right down here. So go ahead and copy paste this and then build you a chart, which is just a regular green-red candlestick chart with volume and RSI on it. So these are my moving averages, and I use them as support and resistance levels. So you want to study your moving averages. EMA is a faster stochastic. SMA is a slower stochastic that runs on a 20-day move. So you want to, I use them moving averages as support levels and resistance levels when I want to get out of a trade. For example, like Friday, we hit the 9, and that would have been a good exit idea. We hit the 21, and then we finally hit the 50 in the close. This thing could have run up and hit the 63 and been a very good trade with a double top right here. Then you got a double top. So if it decides to go ahead and break out on Monday or tomorrow, we'll be looking at 138 something. And that'd be a double top on the body of them candles, which is a tweezer top right here for an exit idea. When it sold off, that's a tweezer top. So that's an exit idea. You learn them patterns that want to get you in and out of a trade. Learn them candlesticks. So we've had a pretty good sell-off. We were at 152. People were calling this thing to break out after earnings. I said, hold on. Remember what happened last time earnings came out, and I kept being in the now is part of the strategy. And I'm going to give you the 5 steps of the strategy to kind of fine-tune your trading. But last time, being in the now, earnings were good, but they pulled off because I think it was the market cap. They were complaining about the market cap was too high. I thought it was a joke, but the stock pulled back. Same thing happened this earnings. That market cap was this time at 3.5 trillion. That's 500 more million than what it was before. Billion than what it was before. 3.5 trillion. And they didn't complain about the market cap this time. They complained more about Trump tariffs. So being in the now, why is the market being kind of Polish backish? Because fat cats are worried about the tariffs. I'm not. But that is an excuse for them to bring the stock market down. And that's what they're using right now to bring it down and buy better deals and get back up, because these stocks are way too high to begin with. So I've got my moving averages, study them. We got the double bottom on NVIDIA, and I'll just keep going on down. You know, I got Mara on here. If Mara decides to pull back, we got a symmetrical flag. So you want to draw that flag in. I guess we can put it right there. So that's a symmetrical flag, and we're at resistance right now. If this thing decides to break out, the next resistance will be the double top. Right around $27.96, and that's where it's been having a hard time breaking, right around that $28 level. Now, if we decide to get a pullback, I mean, it's wanting to squeeze, and it could break out to 28. If it doesn't break that trend line, starts to pull back, we could almost count on it hitting the bottom of this triangle, and if that holds, the next time up. But it's already had its little, I mean, it could be ready to break out. Then I'm always looking at the moving averages. You know, if it does break down below that triangle, I'll pick it up here off the 200 EMA. And if that doesn't hold, we got another trend line right here. So I'm looking for trend lines. And that's a double confirmation that that's pretty solid support right there. So 5 steps in creating a good watch list. Tips of building an effective watch list. You got to have a good watch list. When you come in the morning, you want to look your major stocks that you love, stocks that you appreciate, stocks you've done well with, stocks with good volume, stocks with great news. Those are the kind of stocks you want to put on your watch list to be effective. So keep it simple and keep it fresh. That means start off with a small watch list, maybe 10. Keep it simple. Keep it with your top stocks and keep it fresh. If that stock ain't working on that watch list, take it off and add another one. But make it simple. Don't make it real elaborate, because look at my watch list here. I got it real simple. I just got the symbol, the last price it was at, the net change, the volume change, the volume, and then the percentage change. And that's all I really need to know on my watch list. Maybe you're more technical and want more stuff on there. Fine. And I can go in here in the morning and I could hit my watch list and hit the percentage, and I see Dell's took a big hit. So I want to look at Dell and what's going on, earnings. I mean, these stocks are way overpriced. This one here dropped $25 in 2 trading days. And I got a 3-day rule when I have bad news, because there's people stuck in these trades. They're going to want to run this thing back up. CrowdStrike, another pump. This thing was pumped harsh into earnings. Let me show you what I mean. Just loaded up. They loaded up on this stock. This stock had real bad news. And then 3 months later, it's back up here again at a Head and Shoulders. That's a Head and Shoulders. But it had real bad news. It had a breach, with Delta. And it recovered because this is a well talked about stock. It doesn't matter. I don't care. It doesn't matter. Sometimes the news doesn't matter. They just look at the price. And that's why I'm not a fundamental trader. I'm a technical trader, because I can understand technicals better than I can understand fundamentals. Fundamentals, I've seen stocks have great earnings and then tank. So fundamentals don't mean crap to me in my strategy. Step 2, start off big and small. That's kind of what I was talking about with the watch list. Grab you 20 of them and then start weeding them out, making them better. Play your favorites. My favorites are tech. My favorites, a lot of people like to play energy. Other people play pharmaceuticals. Other people will play Bitcoin. Other people will play shit coins or whatever. Play your favorite tickers, the ones that you really, banks, whatever you like, whatever sector's running. And I define my favorites in different watch lists. I'll label them. Like one will be energy, one will be housing, one will be so-and-so, one will be a daily watch list, like the Jim and Tony watch list. It's my daily watch list. I used to make them every day. And I did that for about 15 years, have a new watch list every day. And now I'm just down to one, and I can go back and look at other sectors that I have logged into my watch list. Find what you want. Find what you want. That means build scans, build filters, set a certain criteria of stocks that you want to trade. Or do you want to trade stocks from $1 to $5, or are you a penny trader? You just like to trade, you have a small account and want to trade penny stocks and build it up. That's what I did when I first started. And be in the now. Number 5 is the most important one of all. Keep up on the news. Be in the now. Right now, we have a new president. We are unburdened by what has been. Government has been making millions of dollars for themselves. I mean, look at these politicians are worth hundreds of millions of dollars on a salary of $100,000 to $170,000 a year. It's crazy how much money they're worth. Well, they're inside trading. Nancy Pelosi, all of them. That's what they do. They get into Washington, they make the rules, and then they're doing insider trading and getting away with it. So be in the now. We know that Kamala lost. We know that Deutsche is going to come in. We know that the Wall Street is freaking out about tariffs, and they're all just putting worry in the market. They're a whole different elite. They're elitist. They're progressive liberals up on Wall Street, and we're just common folk down here trying to make a living. They have no clue what's going down on Main Street. But they're elitists, so you got to be in the now, study the news. Is the stock making money? How much? Go through the news. You know, if you notice on I have the news right here, so I'm constantly looking at the news. And I'll pull up Wahoo Finance and look into the news in here. Maybe type in a ticker, PLTR, and read up on the news on PLTR and see if there's anything in here. I might want to go to the website and see what's going down on the website. But this has had a 300 or 400% gain already. So get that watch list going. Study the patterns. Now the strategy that I built, it's called the Sneaky Snake Trading Strategy. Whoa, what happened there? No, I'm screwed. I got to find my chart. There we go. So all these little knives that are coming in, these are what I'm looking for. Like right here is a fallen wedge. So I knew that was getting ready to break out, and it broke out with a gap up. And it broke the 200 SMA. Here's another snake. Knife catch. So you got the knife. She started breaking out of the channel. She broke out. Boom, pulled back, created a head and shoulders. Bounced up off the head and shoulders, and then boom, all the way up to the upside to a double top and get out of the trade. So we're at an all-time, we're at double top resistance on CrowdStrike, and that's why it pulled back. Now it's hit the 21. We come in here Monday, and this could be a good trade Monday morning. This is on the daily. Now I've got different time frames up here that I can go to back and forth. I've got yearly candlestick patterns. So I've got these broke down in different time frames. Weekly. I got monthly on here. 15-minute. 1 hour. One of my favorite chart patterns right there. We got a triple bottom on CrowdStrike. So we can come in Monday and this thing can bounce up to a 1, 2, 3. Just take your trend line, run it to the top of that. There's your 1, 2, 3 triple bottom right there. So this thing come tomorrow could be a nice little breakout. Even if it pulls back a little bit, she can run up and find resistance here at 355. And then you've got resistance right here. There it meets up with that resistance right there, so it runs into all them moving averages. That could be a good exit idea. That's a triple top, 1, 2, 3 breakout, pull back, boom. So anytime you break a triple top, don't rush into the trade. Wait for that pullback back to what was resistance now becomes support, and then it runs on up and breaks out. So I'm never telling people to rush on a triple top breakout. Let it pull back, consolidate, and then take the trade if it holds that support level off that triple top. This is another flag, see? From downside to the upside, almost an ascending triangle, but when it had hit that triple top, then it became very bullish. And there's a triple bottom, and that was a bounce on Monday. Or yesterday. Come down here and hit that triple bottom. Then bounced on up for a good trade. Snake. Whoop. So if I was charting this up, this is my strategy of the sneaky snake. And this is what makes it so easy. People say, God, I don't know how you do it. Well, it's pretty simple. Oh, come on. This computer is really starting to mess up on me. So there's your knife. You got 1, 2, 3, 4 times. It finally breaks out. Shit. You got 1, 2, third time it didn't break out, and then the fourth time. It did break out. Once it broke out, it pulled back and created an inverse head and shoulders. And then it finally bounced up off that double bottom. So you got the snake, breakout, pull back, up to the 200 and out of the trade. That's the 200 SMA. So it goes right up to the 200 and you get out of the trade and got you a nice little scalp. Now this is a so right in here we have what you call falling wedge. You got your snake breaking out into a falling wedge, and then boom, to the 200 and you're out of the trade. That's it. Real simple. Then it pulls back again for a double bottom, and then you take it to a double top at the end of the day. And there's another snake right here. Another little sell-off. So you take and you draw your channel in there again. Every sell-off, there's a trade. You just got to learn how to count to 3. And count to 4, you might make a little bit more. But again, it's real simple. It's a hard, it took me a long time to figure this out. And once I figured it out, I just Yeah. Gosh. Touchy this morning. So it breaks out of the snake, pulls back, touches support off the top of the resistance, and then breaks out with 3 white soldiers, 4 white soldiers, which is a huge indicator that we're going to an upside. It's very bullish at this state, and you want to stay in the trade. Maybe I probably got out at a double top right here, but look at that. It runs on up. These soldiers is a leading indicator that you're going to be getting out of the trade. 3 white soldiers, boom. 3 black crows, and it sells off. So learn them chart patterns. That's a bull flag. That was back on that thing. Bullish flag. And it breaks out to the upside. So learn them chart patterns. Learn them one more thing I wanted you to learn. Two more things. Doji. Learn these dojis, the reversal candles, reversal candlesticks. Get in here and study these candlesticks. What causes when you're looking at a stock? We got Hangman. We got Gravestone Doji is a good indicator. Gravestone Doji. We got a Doji candlesticks coming up showing that we could have a possible sell-off right here. That's when the buyers and sellers are done. So I want to study them candlesticks. I want to look for what's going to cause that stock to reverse. Bearish reversal patterns. Hangman, Gravestone Doji, dark cloud cover, bearish harmony, 3 black crows, evening star. I mean, just when you see in a reversal in a pattern, what is it? What's causing them reversals in them patterns, them stocks? Here's the SPX. I traded this a lot Friday. This is my daily trader. See, I've got a couple trades right here that I called out. Called this one into close. It started building a flag. We had an ascending triangle right here, kind of a downward wedge. And I sold this way too early. I had a cost average down, and then the sucker runs up to $2.15. That'd have been a $4,000 trade right there if I didn't chick out of the trade. We had 3 white soldiers here. I was out of this trade once I got to 85 and made $300, but that could have been a $4,000 trade right there. Here's another one right here that I called out in the room. This snake breakout. We had a head and shoulders right here, broke out, and then it pulled back. Another breakout to the upside. It hit the 200 SMA right here, and that's the one I called out. This is a long leg doji for the reversal. Long leg doji. And I knew that that was a leading indicator to take this trade off the 200 SMA. And I took that and run it all the way up to a double top and got out of the trade. I got it in it right down here because I saw this long leg doji and I knew. And then the tweezer bottom right down here at the bottom. These are tweezer bottoms, long leg doji off the 200 SMA. So I had 3 indicators to take that trade. When you have 3, that's pretty good. When you only have 1, it's a little risky. And she ran on up to a double top and exited the trade, and I was out of this trade with $1,200 within minutes. 9 minutes, 10 minutes, I was out of that trade. Double top, you get out of the trade. It's an exit. It's a bearish. Double top is a bearish reversal. So I know to get out of that trade at a double top. I know to get out of that trade at a triple top. I know to get out of that trade on a rising wedge. I know to get out of that trade on a head and shoulders. And I'm out. And then when they dip, I'm back in it. It could be a great stock, great news, but when you hit a pattern, you want to get out of that trade and take that profit. Don't hesitate. It's better to be green than to end up red. And you can profit 1,000 a day with a small account. Start off small, make it simple, and then make it difficult. Make it more harder, but start off simple, easy, and fresh, and that'll help you out a lot. So that's it. That's the Sneaky Snake trading strategy. I want to wish everybody a very happy Thanksgiving. I hope I kind of helped you out a little bit, not threw you sideways, but basically create a good watch list, study chart patterns, reversal chart patterns, study reversal candlestick patterns, be in the now. That's very important that you're in the now. Are we at a high resistance? But Jim, what do you mean by being in the now? I got this little map. So when everybody's real greedy and pumping the market at triple tops and things are up 3 to 4 to 500%, which is very unusual. I've been at this for 20 years. I've never seen such greed in the market that I've seen in the past two. I've never seen stocks run up thousands of percent. I've never seen them run up 600% in a year's time, in a year and a half time. I've never done it. I've never seen it. It just don't happen. It's happened now, and we're way overbought, and they're using the excuse of the Trump tariffs. They really wanted Kamala to win because they knew that free money was coming in. Biden printed $13 trillion in 4 years. That's seven more trillion than what Obama printed in 8. That's how bad it got. And all that money went to the top 1%. Don't let them fool you. So at the greed and then at the fairest, when people are really freaking out, that's when you want to start looking at buying the market. That's what I did 3 years ago. I took 4 or 5 swings and I tripled my account with just 4 or 5 swings. And I told everybody, I said, man, these things are cheap. Filthy cheap. Tesla $1.10. I mean, I can go down the list. NVIDIA under 100. And people were laughing at me, saying, no, we got more drama coming. I said, no, I'm telling you. How could I tell you that they were so cheap? Because of a moving average. SPX. Weekly time frame. Off the 200 SMA on the weekly. And I'm yelling people. I said, we're at the 200, folks. We need to get in this trade and swing it. All of them. And people, I did a video. I wrote a song about September would be the month that you would remember. And boom, we went from 3,400 all the way up to 6,000. And now we're at, look at the run. I mean, this is irrational. This is irrational. We need a good pullback. So I'm in the now. We had 3 black crows. I called it off to 21. We had 3 black crows. And then we had this engulfing candle. I called this one here. I said, we're going to come back to the top of those crows again. We came back and hit the 21 again. Simple, easy. On the weekly, calling these trades out on the moving average. We can come back and hit the 21 again. and be a very strong buy for this market as we go into 2025. So they're putting fear. They want to bring that market down because they know damn good and well this market's way too high. Way overbought. Way overbought. And I'm in the mood of catching knives right now. I called this market out. I said, did a video last week. And we made it to the 21. You go through here and watch all these videos. Good morning, retail traders. I'm Washboard Jim with a Sneaky Snake trading strategy, where I love talking about chart patterns, moving averages, and being in the now. But this is a different kind of video. This is a preparation video of how I'm going to be thinking right now. And I'm not too happy. I'm not too happy at all. I've got thoughts on my mind that I just can't get off my mind, so I'm becoming a bear in this market. I'm going to be a lot more or less cautious. I sold all my swings. I did well on them, but I just wanted to get out of the market. I just want to have nothing in the market. I have nothing in the market right now. I sold everything. Russian officials say Biden's decision to let Ukraine fire missiles deep into Russia could lead to a world war. They think this is a joke, the Biden administration. So I used that being in the now, and I started buying, started looking back and say, I'm going to be a lot more cautious in the market. And this was last Saturday or Sunday when I stated this. And then if you look at the SPY on the 5-day, or the SPX, we had a big old sell-off to the 200 on the 5-minute, and then we bounced up to a double top, then we had another sell-off, and then we could come back down and hit this double bottom right here and be real good strong at 570. That's called a yin-yang, I call it. There's your pattern right there, ascending triangle breakout. Then you could call this a double bottom right here. And be a strong buy. Maybe it'll stop right here at the top of that triangle. So that little channel in there is going to be maybe the spot to run this back up to the upside. Who knows? But I'm doing real good right now because I'm cautious and I'm waiting for the knives, and I'm giving a little extra time and catching them. See, this one here pulled back to that previous resistance level and broke out. This snake here broke out. I called this one out Friday. Big old knife, sell off. You buy the puts, which I did, and then I bought the call. And I got stuck, and I had to wiggle my way out of it, but I still made good money that day. So that's it. I hope I helped you out a little bit. Create a good watch list. Study them chart patterns. Study the candlestick patterns. Be in the now. Keep up on the news. And keep your watch list simple. You don't have to have a big watch list. I can trade the same stocks, and I have been here for the last year. SPX, Tesla, Nvidia, Apple. I mean, I've kept it real simple. And I made more money this year than last year by keeping it simple and running this market up to the ups. Now we're at all-time highs. I'm scared to death. I got to wait. The market is coming in with this tariff crap in the news. They don't like Trump. CNBC had Trump on every week and loved him. The View had Trump on and loved him. Oprah loved him. Everybody loved Trump. And all of a sudden he ran for president. He's taking away the money from the coffers, and they can't stand it. So it's strange. I still love the guy. I mean, I was an ex-liberal, and just to watch my party go to hell, I decided to become a conservative, and I'm feeling a lot better about myself and my principles, and I do not support the human trafficking that's going on. So, I'm in the now, and I'm trading this market perfect by doing that. Have a great day, retail traders. Happy Thanksgiving.